Hey everybody, this is Alex from KeeneOnTheMarket.com with your end of day recap. I actually want to talk about something that not a lot of technicians talk about, and that is Dow theory signals. Right now, I've been telling people in our trading room that I think we have a bull trap kind of fake out move here in the overall market. That's the S&P and the Dow Jones Industrials. And one of the things that chartered market technicians have to focus on is Dow theory buy and sell signals. So in essence, you know, if you make something here in America, it will show up in potentially the 30 biggest Dow stocks. But what the Dow theory says is if you make something, you actually got to ship it somewhere. So you can see here on the right, you have the Dow Jones Industrial Average, and the left, you have the Dow Jones Transportation Average. You can see that there was a pretty significant top here where the Dow Jones Average on the right actually made a higher high, but it was unconfirmed by a lower high in the Dow Jones Transport. When this happens, this is typically a good sign that there's a fake out rally. This is a possible top in the overall macro market. Again, there's also a current deviation where you got the Dow Jones Industrials having a nice little increase here, testing underneath its 200-day moving average, closing at a higher high here in the last 3 days. But the transports are not only lagging, they're actually almost closing in on new lows. We actually ticked lower than 3 days ago today, intraday. So basically, this is showing me that the market is not in gear. There's a lot of flux. There's a lot of big money that doesn't know where to put itself, and it's most likely flowing into safety stocks, that is the Dow Jones average stocks. So I just wanted to point that out first thing in our chart, and let's go to the minis. So now, since I think the Dow theory is really signaling us a bull trap here, and yesterday we had a unconfirmed Hiromi, we traded up back into this zone where there was a previous Hiromi pattern. And now I'm looking for possible resistance up near this 1370 region. So, I mean, here in the near term, we're still looking at this trend line as being significant, as well as a trend line that connects the tops of the March high all the way down through April and through June. So you can see that will extend right there. Still stuck in this kind of sideways movement. You can see that the DMI, this is a measurement of trend, is telling me that the trend, even though ever so slightly up in the near term, is very weak. The momentum to the upside is very, very weak as per the DMI measurement. So that's why I'm still saying we're vulnerable for a move to the downside. I'm actually trying to be patient. You can see I've put notes here, bearish beneath this zone. So I need the market to move beneath this zone, confirm beneath this trend line before I'm really going to consider stepping in again. This will also be confirmed by another sell signal here in the DMI moving averages. So that's your daily viewpoint. Let's zoom down a little bit more into the 5-minute. So pretty crazy price action today. You can see we opened here at about 1354.45. We made a little rally, and then we just completely sold off. There was actually an intraday sell signal that I know Andrew had on. He had it on through the minis and through oil. And there was a nice fall through to the downside. You can see here that there was this little intraday flag. If I could draw it. And so our measure move target was basically measuring the top of the flagpole to the bottom of the flag proper, and then extending it beneath the flag. So you can see here we actually fell short of the measure move target, but this was a profitable position. The market actually had this V bottom, which I actually think is pretty rare. You only get this when there's this weird type of announcement cycle, or Ben Bernanke comes out and fakes like he's going to be dovish and is actually printing like crazy. So you could have actually gone long here on a reverse buy signal a little bit higher and maybe ridden this one up. But, to be honest, today was a little bit frustrating on the intraday, and, it probably would have led to a lot of chop stops. So I just wanted to talk about that. A little frustrating day. Let's go over some unusual option activity. I actually talked about Intel on Bloomberg, and I wanted to say, a true trader knows when to admit when he's wrong. And basically the trade that I was looking at for Intel, which was actually profitable, I was long the July-August 25 strike put calendar. So I'm short the July puts, which right now, trading after hours, will go out worthless. I will collect the entire premium for that short put trade. Additionally, the volatility, which was heightened because of this potential catalyst earnings announcements, that will get crushed, and it will hurt the value of those puts that I'm trying to have go out worth nothing. Additionally, now I'm actually long the August puts at 25 strike, but I'm doing it for kind of a leg or less money. The reason I wanted to do this because the trend is basically showing me that it's making moves and it's trending ever so slightly to the downside. You can see that we here are in full downtrend mode as per the DMI plus, and we're just about at the measurement of we're trending to moderately strong to quite strong here in the current time. So the overall flow, the overall lower lows, lower highs, were tempting me to keep a short position going into this August, but I actually thought the volatility of the current, the July puts were a little high, so I thought that was kind of a interesting trade that's going to be profitable going forward into tomorrow. So I just want to talk about Intel as far as unusual volume. Paper actually bought 10,000 INT January 21 strike puts for 60 cents. This was actually 4 times unusual volume, and this was when the stock was trading 25.29. So I mean, someone is actually making a pretty big paper, bet that Intel is going to go down, or they're hedging a large stock position right here at this 25 strike line. Let's actually talk about PG, Procter and Gamble. There was actually paper sold 11,000 PG July 62.5 calls. This was about for $2.25, 5.8 times unusual volume when the stock was trading about 65.31. So, someone is actually taking, it seems like, an advantage of heightened volatility to sell calls right there at the 62 in the money calls right here. So another trade that actually came across the tape that I thought was pretty interesting because the stock has been on our radar here in the live trading room is VVUS. Paper actually sold 5,000 VVUS July 34 calls, out of the money calls, for about 67 cents. This was 7 times unusual volume right when the stock was trading 26.70. So that I think is very interesting. I think someone is taking advantage of the heightened volatility there as well. So if you would like a free trial to the trading room, we actually added a few new members, so I don't know how the sales team will structure free trials. It's going to be definitely limited. And keep in mind, we're going to keep our earnings series webinars going. Next one, I'm pretty sure, is going to be sponsored by Lido Isle Advisors, so it'll actually be free just like last week. So if you would like to reserve your seat, please email sales@keeneonthemarket.com, and we'll take care of you for the next webinar. That's me. Over now. We'll catch you guys tomorrow.